Okay, so let's jump into it. So the agenda today, I'll give you real quick about me, which most of you guys probably know. We'll cover risk reward and why I think, this is super important. First principles thinking, buying controlled weakness. We'll jump into some examples and then sell rules. Sell rules is the number one most requested thing. I said I'll do a webinar on that specifically because it's really it's not as easy as entry tactics. I can probably explain entry tactics in 20 minutes, but sell rules and the approach to selling really needs its own webinar, but I'm going to cover quite a bit uh here. Andrew says I'm just here so I can make my charts look like Nick's on DP. Uh okay, so I skipped Chartitude space to attend this. Don't tell him we're friends. I don't want a competition. So okay, about me. If you guys were in the last webinar, you've noticed this. I've seen this before about me. My two dogs, are my life. I love them. I've been trading for 11 years, and I am one of four co-founders of TraderLion and DP. So that's a little brief about myself, and I also want to revisit this slide right here, the reality of trading. So if somebody wants to make money and they hear that I trade stocks, I'm not interested in convincing them to trade stocks, unless that's a decision that they make on their own. And the reason is that 95% of traders lose money, right? That's a fact. Uh, it sounds really bad, but also that's what makes the market, unfortunately. But most traders lose money. And so the S&P 500 averages about 10% annually. And so obviously not, that doesn't mean every year's 10%, right? This year's like 27%, and some years will be minus 7%. So it's just over time. The more the market works with time. So the more time you have in your favor, uh, the more advantage you have. And so the S&P 500 over time since the beginning of time has averaged about 10% annually. And so for most people, the best strategy is to just buy the S&P 500 or the Nasdaq or both and don't think any more about it. Uh and so this next slide will like kind of give you an idea of why I think like that. So if you were in my last presentation, I shared my 2014 versus 2024 performance, but I'm breaking it down a little bit differently for the sake of this presentation. So in 2014, my average gain was 9%, my average loss was 6%, my average holding time was 2 days, and I was making over 600 trades and in the year, which I don't know. Honestly, I don't know what you guys average trade wise in a year. I don't know what's normal or what's not, but I was working my butt off uh to just lose money. And that is what motivated my approach that I have today. Because in 2014, I think the S&P 500 was up 10%. I should have kept the old slide, but I think it was up
I,
like
I think you
10%,
said 15. I think it was up 15%.
15%, and I was negative. And so there's nothing worse than, you could have bought the S&P 500, never looked at the market again and been up 15%. But instead I dedicated all of my time to the market, took over 600 trades, and not only did I not do 15%, but I lost money. So that was it's just super frustrating. And that is what kind of fueled my current approach. And so this year I've taken 35 trades. So big contrast to 600. Last presentation, I did write that I took like 43 trades, but after reviewing, I've taken 35. So my average hold time is 43 days. My average loss is 9%, which is a little bigger than I'd like, and I usually want to keep it, below 8, but my average gain is 131%. And so I'll dive a little deeper into this later in the presentation, but The difference in your average gain and your average loss is where you're going to find, a lot of your success and where trading becomes easier, not easy, but easier, versus, if you're making 600 trades and your average gain and average loss, like me in 2014, is uh pretty pretty similar, you're really like math is really not working in your favor, and you're really hustling, uh like instead of working smart in my case. So now
And
this
so,
year,
so Nick, in 2014, just so that everybody understands like a little bit of the logistics, is how much time were you spending in front of a screen and what time frames were you looking at?
2014, I spent pretty much every second I was awake in front of the screen,
Yeah.
and I was looking at probably every time frame available. So I would jump, like I was confused, right? So this was when I was like early trading, and so sometimes I would look at a 1 hour, sometimes I would look at a 5 minutes, sometimes I would look at a daily, sometimes I would look at a weekly, but it didn't really like mean much to me back then. But I was all over the place. And so knowing your time frame and knowing what suits you as an individual the best, is number one above all else. And so now, all everything else. So now 2024, I only use weekly charts. People ask, do I use daily charts to drill down for specific entries? I used to, I don't anymore, just because now it's another variable. And I like it's just not needed. So this is, my trading evolution in like a little bit differently than I portrayed it last time. I just wanted to show you guys like the difference in risk and reward.
Can you
Uh,
just also speak to in 2014, what was your stress level like compared to now?
Super stressed. Like anyone here, how many people do we have here right now? We have 487. Holy crap. Everybody here understands the stress that comes with trading, and I do not like, nobody likes stress, right? So for me saying I don't like a stressful lifestyle is not unique. Like nobody likes stress, but uh nothing is worse stress wise than, like I said, focusing every second of every day on trying to beat the market, and then at the end of the year coming to the conclusion that if you would have just bought the S&P 500 and never once looked at the market, I'd be doing a lot better. Which really sucks because it just sucks, right? Like I could have enjoyed my life. I could have did other work. I could have done a lot more. But instead I dedicated everything I have to the market, and it only hurt me. So, and this isn't to say that it's because I took 600 trades, right? It's just like this is just a comparison. I know there's some people that do better than me that maybe take more trades. And so it's not, just a apples and oranges comparison, but this is just I think this like sums up pretty well my transition into, where I am now. So how did I get here? I reviewed my best trades to find commonalities, and they were held for multiple months. Uh, I also reviewed my worst trades, and I overtraded them instead of just letting them work. And so these two things combined made me think, okay, maybe like I'm my worst enemy. I'm interfering when I shouldn't. And so this was a big wake up call. And then the third thing is I also found that not only were my best trades when I did less and I didn't interfere as much, but my personality matches a less aggressive approach as well, which you guys might not be the same. Some people, you might like more aggression. I do not. And so this realization of my best trades were the ones I didn't interfere with and were held for multiple months, and my worst trades were the ones that I did something with when there was nothing to be done, was a big wake up call and also a big aha moment because it like this, doing a lot just didn't match my personality. So this was a big wake up call, and this is kind of the reflection that started it all. And I encourage you guys to do the same thing, right? Review your best trades and review your worst trades. And if you guys saw my tweet yesterday on APP, your worst trade doesn't mean your biggest loss. It could be your biggest lost opportunity. It could be a lot. And so I encourage you guys to reflect on the commonalities between your best trades and your worst trades. And you'll find a lot there. But most importantly, you need to think about what your personality is, and you need to align it with that. So the conclusion for myself after seeing that was weekly charts for patience and fewer decisions. Weekly charts help maintain a long-term perspective, and they help avoid impulsive trades. And so I just want to also point out that I've been getting a lot of attention lately because I'm one of the few people that focus on weekly charts, and it's nothing new. The most of everybody on Twitter has learned from William O'Neill or Stan Weinstein, and they primarily use weekly charts as well, right? But it's just like it's been adapted by so many other people, and they've adapted it on shorter time frames, daily, etc. And so like my approach is nothing new. I think it's just a little different maybe that I only use weekly charts and I don't take anything else into consideration. Sometimes I look at a monthly, also sometimes I look at a daily, sometimes, but I really at all times just try to use weekly charts for decisions. So if we go to this third point here, that my personality matched a less aggressive approach as well. You need to understand your personality. This is like if there's anything that I teach that resonates with you guys, you need to it should be this. You have to understand your personality. Trading is a very broad term, and that job looks very different for everybody. There are so many trading styles, but it needs to match your personality and your beliefs. And so only you can answer this. You have to ask yourselves these questions. You have to be honest with yourself. Uh, etc. And so the way that I understood my personality was here's my thought process. I'm indecisive. I'm just an indecisive person, right? Like if I have to buy a new toothbrush, I'll sit in CVS and I'll sit there for maybe like 40 minutes trying to think of just things that don't need to be thought about on which toothbrush I should buy. And I'm very indecisive and it shows in my trading. And so I don't want to have to make a decision every single day. I like holding, not entering or exiting. Buying is not so bad, right? But exiting is the hardest part. And both of them are just, they're a little stressful. And I much prefer holding a stock that is going to go up over time, and interfering as little as possible. The more I watch the market, the more tempted I am to do something. And my best trades were, like we said before, were held for multiple months. So, uh, yeah, just checking. Craig, if that was you, who just posted that, you're
Yes.
typing to host and panelists. So,
Oh,
uh,
so it didn't go out to everyone. All right, thanks.
yeah, just put,
Yeah,
yeah,
I wanted to point out there's a lot of questions about strategy. I just want people to know that is coming. We're just doing
yeah,
it for people who are new.
yeah, it's
Um,
coming. We're gonna jump through examples and strategy. I
and
just like this is super important because there's an unlimited amount of people on Twitter who have strategies, but if you don't understand why they work for
yeah,
them and stuff like that, you're missing a big point. And so basically I just came to the conclusion that for me, weekly charts promote patience and lead to fewer but more impactful decisions. And also longer term trends are much easier to identify than shorter term trends. And that's not an opinion, that's just truth, right? Like if you zoom out, it is much easier to identify a trend, like a multi-year trend, than it is to, a 5 or 15 minute trend. So understanding your personality is it's critical. And this is needed for every single person. So my strategy improved my quality of life. So this is a joke, guys, obviously, but this is me and my private jet, me with, one of my many cars. This is a joke, but I just made this to emphasize that for me, what really improves my quality of life with trading, and this is a huge personality thing too, right? My real luxuries, when I think of trading, this webinar, it will be about an hour and 20 minutes, about. So when my luxuries, like when I associate, I think like what traps a lot of people up is they join trading because they see images like this and people living these luxurious lifestyles, but it's really not very realistic. And but regardless, like this isn't what I value either, right? Like I value money, but I value money because of time. So why I like my approach and why I value trading is because I get to spend all day, with my dogs. Like we can go for walks. I can focus on um health. I can go to the gym when it's not busy. I can go food shopping when it's not busy. I could spend a lot of time doing what I like to do, and that for me is the real luxury. So when I think of, my perfect life, it doesn't have to do with money. Obviously, money is related to time, but time is my ultimate value. So I trade and I'm attracted to trading because of the time that it gives me in life, not because I want to be on private jets and driving supercars. And if I did promote this stuff, right, like a lot more people would be interested. But to understand my approach to the market and my personality, just to emphasize, like I don't value this at all. I value time, having control over my time. I think that's freedom. And this is what my motivation is at the end of the day. So, uh, even if I could double my year-to-date performance by setting hundreds of alerts, taking hundreds of more trades, and watching the market all day, no, thank you. That is the equivalent of working a job that you hate. It doesn't matter how much money you make if you're miserable. So obviously in 2014, like when I shared my approach, not only was I not making money, but I was miserable. So but even if I had that same approach and I made a lot of money, yeah, I'll be happy, right? I make a lot of money, and of course you need money for freedom, but the process I absolutely hate. And it, like, when growing up, when I was confused going to college, like what do I want to do for a career, you people say like do what you love, but when you're younger, you're always thinking just like what makes the most money? What, like, how can I make the most money? And like that's just, that's not the point of this presentation, but it's just trading looks very different for everybody. And I just like I said, I value my time. And I think what people don't understand is if you just buy the S&P 500, uh, that on its own, it can really enhance your life and change your life. So when you want to get involved in trading and take it a step further and get more involved, you know, you just want to make sure that it matches, what you value. And so, I, wouldn't want to be if I got offered $1 million a year to work a job that I hate, I couldn't do it ever. So my approach is something that works for me, and by sharing this, maybe some of you guys will realize uh that it works for you. So this is just
Before
yeah,
we go into strategy, Nick, there's a pretty good question. Back in 2014, would you say that your reason that you were losing money was because you were over trading? Would that be what was the reasons you didn't make money?
100%. It's but like there's many reasons. But yeah, it comes down to over trading. And even this year, guys, like I'm having an amazing year. Keep in mind, most people are, right? So I just want to throw out super quick. I You don't want to compare yourself to anybody else. So if you see someone else having a great year, like, everyone's in a different stage. You don't want to compare yourself to somebody else. But you do want to compare yourself to the S&P 500, because if you're up 30% and the S&P 500 is down 10%, that's amazing.
For a
If
year.
you're up, like if you're up 30%, but the S&P 500 is up 30%, then, that's not amazing, right? Like if you place 100 trades, you're outworking yourself for nothing extra. So you want to compare yourself to the S&P 500. And so I at the time, yeah, I was just over trading. I was just doing a whole lot. And what I like about weekly charts for myself is that I like I said, it promotes patience. And so I made a joke. I mentioned this in the last webinar, but I made a joke on X, and I said uh, they were wondering how they can increase participation in the market, but guarantee that everybody who participates loses money to like fund the rest of us. And so they made intraday charts, right? It's a joke. I know tons of people that use intraday charts and do very well. It's a joke, but the truth behind it is that if you are watching the market every second of every day, it's it's hard not to do something. Like the market doesn't require doing something all the time. And if you're watching it every single day, especially on intraday charts, like it is very easy, like it is hard not to react. It's hard not like you're putting yourself in a position where over trading is just natural. And when you only use weekly charts like I am, and I'm not saying, everybody should only use weekly charts. Like I want you guys to find what's best for you, but by understanding how weekly charts help me, like it by not, especially like when I buy a stock and I'm holding a position, I try to keep it out of my eyesight if I'm looking at the market intraday, because I don't want to have an emotional like impulse to interact. Uh, because if I see it after market hours, then even if I get a little emotional, like I can't do anything at the time really. So, it's just like uh it's very impulsive, the market, when you're watching it. And so the less you watch in a sense, or the shorter the time frames, the less tempted you are to do stuff like when there isn't anything. So the risk reward commandments. The bigger the difference between your average risk and your average reward, uh, the easier trading becomes, and the less stressful trading feels, and the harder it is to lose money over time. Like, that's important. But also, the bigger the percentage moves, come become more common, the higher your time frame is. So, back in 2014, when I was trading intraday charts and all these time frames, 100% move if you're on a 15-minute chart is rare. But if you're on a weekly chart, 100% move is not rare. You have time working in your favor. They come quite often. And so the higher your time frame is, the bigger, the bigger moves become more common. So one of the biggest questions I get asked about weekly charts is how do you manage your risk? Like how do you keep your risk small? And it you know my average loss this year is 9%, which is like I said higher than I want it to be. But at the end of the day, like if I think something's a really good setup, I don't mind risking 8% because my average gain, is 100% plus. So when you're thinking of that concept from a smaller time frame, it's okay, if I'm risking 8%, I need to make sure that whenever I sell this, it goes higher than 8%, right? But when you're on a longer time frame, that's just more common. It's just time works in your favor, uh, and it's much more common. So what I really want to emphasize, and then we'll jump into examples, is first principles trading. So you need to understand the foundational principles of why something works. So something I've been talking about a lot and I share a lot is my setup, which I call the character change. And so you're just looking for subtle shifts in a stock's behavior. So you're looking for three things. One, big volume paired with strong price action. Two, first high or low. And three, new respect for a 10 or 30 week moving average. This is a very black and white technical breakdown of the character change. So, uh, you know, if you guys follow this very black and white and are looking for these three things to specifically happen, you might find success, but the key to success is you need to understand why do I look for these three things? And it's because it's the foundation of what moves the market. So if we look at first principle tradings, let's break down each one, right? Big volume with strong price action. So big volume is a sign of institutional activity. They move the market. That's what we want to spot. But if you pair it with strong price action, right, like a candle that closes in the upper 50% range, this tells you that the demand was on the buy side, that the institutional activity, the volume that you see was accumulated. First high or low, an uptrend can't be established without a higher low. It's just a characteristic. It also signals that the momentum has shifted, and based on number one, the big volume, it's now showing that okay, if this was accumulation, now it's showing support because we're having the first sign of buying pressure coming in and a trend changing. The new 10 or 30 week respect, if you have these first two characteristics, it's very likely. Yeah, I'm gonna jump into to real examples, guys. Um, Greetings, Marios. I'm glad you're here. Marios is here, guys.
Wow.
That's awesome. That's awesome. The first new respect of one of these major averages, it's just another sign of controlled action. So you've got these first two signs of a trend change. Now you're for the first time respecting one of these moving averages. It's showing that it's controlled. And but mainly it gives us a way to manage risk. So
Nick, go back to that. So just for everybody listening, I've been following Nick for a long time. This slide right now is something that you really, really want to understand. So, Nick, can you go to Deep View, pull up a chart of something you've either bought or looking at, and walk us through each one of these three principles and what you see on a chart and why it's important?
yeah, so let's go to you for a good example, I think here. So you you know I just want to show you guys. So I only highlight the big volume, right? And so in this kind of base here, after U's been broken down, we have the big volume, but there's really no high or low because after the big volume, we make a new low. And so you need to have at least both of those. And then again, after the big volume, that's why the big volume on its own isn't a sign to get involved. After the big volume, uh, we still make a new low, but then we have more big volume with strong price action coming through. And then last month we had a pullback, which made our first higher low and also pushed off that higher low on really big volume, excuse me. So something like this, like volume on its own is not a buy. You want to see at least the first two things, higher low and big volume. Uh, And so this kind of showed the first two signs of a character change. And I posted this last week and or 2 weeks ago, and a couple of people said, it might be early because there was no 10 or 30 week respect, right? But if we go to this here, like that's why first principles trading and understanding something uh is why you will be successful. Like you guys can look at my character change, like the three things I look for. And if you're just looking for this black and white because you heard it, like you might have success. But the point is like if you guys understand why each part plays a piece in the puzzle, then you guys will find new iterations of the character change that might even be better than what I've found and find new ways to enter stocks that I haven't. And it's like to do that though, you just need to understand this. And so the new 10 or 30 week respect is kind of like the last and final confirmation to be able to manage risk. But everything is just about managing risk. And so once you have the first volume pop and the first higher low, you can get involved. And then when however this plays out, if the 10 week or 30 week catch up and this does support it, then if you're not in it, that's a great spot to get in with managed risk. And if you are in it, you could add as well.
And so this is really important too, is when Nick scans for these and he finds a character change, it doesn't mean he's buying right now. It just means it's on his radar, and it's oftentimes on his radar way before it is on anyone else's. Because when he bought ONON, when he bought Peloton, no one else was talking about him. If you bring up ONON and you look at what Nick was seeing with the character change in the higher low, I don't think anyone was looking at buying it. But then can you bring up ONON real quick, Nick, and show them
Yeah,
like
yeah.
where you picked it up and what it's done since?
Yeah,
So,
so actually, let me go through one more slide before I hop in here because it'll make
yep,
a
yep,
lot
yep.
more sense. But so that's why first principles trading is important, right? So if you guys like, regardless if it's my character change or my strategy or it's Minervini's VCP or whatever, like you don't want to know that you don't want to know the technical characteristics of a VCP. Uh, and that's it. And that's what you trade off of. You want to understand like, okay, if the VCP is a repeatable pattern, why is it a repeatable pattern that works? Like that's what you want to know. And so, really quick, both of these can be true, which people find hard to believe.
Yeah.
I can, at the same time, I can look at a stock and say, this is most likely going to go much, much higher. But I can also, at the same time, not be interested in buying it yet, right? Like if you can't manage risk, it doesn't matter if you think the stock's going up. It doesn't matter. And so patience is critical. So before we jump into O and ON, I just wanted to go over this here. So we're gonna jump into examples now with controlled weakness and buying controlled weakness. And so you want to look for one of two things. You want to look for either levels that indicate a character change or levels that you can manage risk after a character change. So now, let's look at ONON. So I've dived deep into this on X. You guys can find this. I shared a lot about it. Even in my last presentation, I went over it. But this first higher low and then this huge volume with this huge candle. This right here, this volume with a candle like this is something that I call like a trend starter. So just because though this happened and you have a higher low and you have the volume push higher, this is the character change for me. But uh there was nowhere to manage risk. So even though I believe that ONON at the time was going to go a lot higher, I'm not interested in buying it because I need to see first how can I manage risk. And so I waited months, guys. Like I waited, you know, it it made this low here. I still didn't buy, but I was able to, draw a trend line, see maybe it'll respect it. And then by the time it came down again, I was able to buy over here. And so we have our character change back here in March. But I didn't buy until what is this? January of this year. I didn't buy like for months later because I didn't find an opportunity where I could manage risk until then. So this is an example of we have a character change, but you have to wait to manage risk. And so I waited. And then if you want to look at the first example, levels that indicate a character change, let's go to a couple recent examples. So a recent buy that I made was SQ. And the funny thing is too, I posted it on X and I put out two scenarios, right? And one scenario was, at the time I posted it, we just had this candle which broke above this multi-year resistance. And so the two scenarios were, okay, this is either going to break out and then, find support at the 10-week moving average where we'll be able to manage risk or, the breakout will fail, and then you just want to make sure that this at least trend line is respected. But I ended up like there was a third scenario I didn't mention, which actually like I was able to get into it, but after we poked our heads through here, I missed this. So I wasn't first off, I don't like to buy these breakouts, but if I was paying attention, I would have bought this just because it doesn't like I prefer weakness over breakouts, but you got to do what you got to do, right? So I would have bought this if I was paying attention, but I didn't pay attention until it was already too late. The next week, we and pulled back like slowly above this resistance. So we have a multi-year base being built here that we popped out of, and I missed this original breakout, but the fact that we pulled in near this, now let's see what my risk was. But, I bought somewhere like here and, risk is like 3.4 or like 4% ish on this trade, right? So basically if this controlled weakness fails, it's gonna then, the breakout will be failed and we'll probably get to like scenario two. But the risk here for 3% to get involved, it's very controlled. And this is, if we go back to the presentation, this is a level that indicates a character change. So since 2022, or yeah, like for the past couple of years, this level right here has been resistance. And so this base has been built with this level that every time it gets to, it gets rejected. Now, the first time that we close above it, we pull back and it's being supported by what was previously resistance. So if we go back here, that is a level that indicates a character change. And so 4% risk right here is a no-brainer because, which I'll jump into in a second with the sell rules, like this is a first stage base, right? This is a brand new uptrend. So if the market gets weak and fails, most stocks will fail. So this can always, come in and stop me out. But, if the market stays strong, this is a brand new first stage base. And so this is something that for 4% risk, like uh you have a new uptrend. That's incredible risk reward. These are the ones that, you could size up and it's absolutely uh incredible risk reward. So now we just watch and see how it plays out. Um, for those of you that aren't in it, now that we're kind of making progress above this resistance, you'll kind of look for the 10 week, right? To see how the 10 week catches up maybe to see if you can manage risk. The point is that you just want to make sure, like just like we said, this can go. I might think this will go much higher, but I don't care if a stock's going to go up, like if I can't manage my risk.
Where would you put a stop? on this, Nick?
So when I bought this, I placed my stop like just under this resistance level. And if we come back in, I'll be stopped out, and then either we'll keep failing and or we'll find support at the 10 week or this kind of trend line. Or it could just stop me out by a penny and then go right back up, and I just have to buy that again. So there's no way to know. Like I put two scenarios, but the market kind of works with almost unlimited scenarios. So but the point is that like if you look at this, this is an A plus setup, and what like we're saying, we want to focus on risk reward, like where the math is in your favor over time. And if you take trades like risking 4% on a beautiful multi-year base breakout, like I showed you guys my average gain versus average loss. This it's a no-brainer. It literally doesn't matter if this fails and stops me out. If I just keep taking this trade 100 times, like there's no way I'm not profitable. So this is an example of scenario one, levels that indicate a character change, and ONON was an example of a level that you can manage risk um after a character change. You're just waiting for the ability to manage risk. So I see a couple of people asking like, is it similar or is it the same to Stan Weinstein? Yes, it is. It is similar. He's one of my biggest inspirations. And so uh, you know, that's what's important about this presentation is you guys might not agree with everything I say, but something might resonate. And Ross Haber said something one time that was really funny, and he was basically like, William O'Neill and Stan Weinstein are two of the greatest traders that most of us look up to, but there's stocks that are Stan Weinstein's like A plus setups that William O'Neill would say is garbage, and there's stocks that are William O'Neill's A plus setups that Stan Weinstein will say is garbage, and so you like everyone sees the market a little bit differently, and like as long as you understand the first principles of what you're doing and why it works, but beyond like the surface layer, you're gonna be fine, and as long as you match your personality. I didn't get here overnight. Like I showed you guys a 2014 to 2024 comparison. I'm heavily inspired by William O'Neill, Stan Weinstein, uh, Amit Rai, Oliver Kell, Ross Haber. And so I've taken a little bit from everybody, and it's inspired, and come to what my strategy is. So, you guys, I'm not expecting you guys to love everything that I say and my approach, but like I said, if you take something away from this, it's understand why something works, right? Don't just if someone says, you sell if it goes below the 10 week or whatever, like don't take that for face value. Like understand why am I selling if it goes below the 10 week, and you want to understand like the principle. Yeah, there's a character change screen in deep view. Um, that's actually pretty good. So I think you guys will enjoy it. Uh, Craig, like I said, I just gotta, my dogs are barking. I don't know if you guys hear that. Just give me 30 seconds. I will be right back.
Cool, cool, cool. All right, so yeah, I'm seeing a lot of questions about like how does you find these? And Nick has built a purpose-built screener in Deep View to find the character change. So if you go into Deep View and you look in the screener section, you can type in character change and you will find that screener. And that picks up a lot of these stocks that he's looking at. And again, the whole point is you are finding stocks that are following his character change, which is a high volume character change followed by a lower high. And a lot of these stocks are things that aren't on other people's screens that are just setting up out of long bases. And so you're getting in early. before a lot of other people who look at dailies will be seeing them. So you can manage your risk, and you can stay in them a lot longer, which is why his average gain is so high.
Cool. Yeah, the characters change screen in deep view guys, is my volume on? Yeah.
Yep, you're good.
In deep view guys, like all of our presets, you can see how we created it. So it's nothing secret. So if you look at my character change screen, you can see exactly how it's made. But uh I don't think there's another platform out there at the moment that could accommodate it because of like the way that we have our filters. We have different things where you can set like a group to be and. So if I put three criteria, stocks that meet all three will make it through. And then we also have like or. So if I put three criteria in the or, um, only one of them has to be met to go through. So yeah, you guys could like if you're a DPU user, you can go through, you could see exactly like what the character chain screen is made up of. It's not a
Uh,
secret.
just a couple of questions about how you identify high volume. So Nick has an actual preset on his volume bars. Do you want to just talk about what that high volume means to you, Nick, and why it's set the way it is?
Yeah, we talking about like the actual volume here,
Yep.
like on the yeah, so yeah, they're pocket pivots, Ken. They're yeah, this will be recorded. If anyone has to leave, what I'm about to right after this, I'm gonna jump into sell rules, and then we'll probably be done in like 20, 25 minutes. Uh, but if you have to leave, it'll be posted on TraderLion YouTube later this week. So my volume looks like this. So this is just deep view enhanced volume. If you are a deep view subscriber, one of the indicators is just enhanced volume, and I'll show you right now. Like all it is we have up volume, down volume, pocket pivot, and reverse pocket pivot. I'm not a big fan of calling it pocket pivot, reverse pocket pivot, but that's a different story. But basically, like the pocket pivot showing you a above average volume with a positive close, and then reverse is just showing you like dried up volume days, like days that volume is unusually low. So I just I just like if you just take this indicator and add it to your chart, you'll have normal colored volume and then the pocket pivot days will be green. But I don't care. Like I just found that only highlighting these days like just makes it a lot easier to follow accumulation. And so that's what it looks like. And despite my character change screen, which I do look at all the time, my daily routine is I just go to up on volume. So there's a an up on volume screen that I run, and every day I'm just kind of tabbing through all those charts manually. And if anything's gonna make a big move over time, it's eventual like at one point it has to appear on up on volume. So that's why that's just like my favorite scan to kind of go through on a day by day basis. And in the last webinar, I'm not going to go through it here too much because I don't want to take up time. But when I'm going through up on volume, I added it to three watch lists. It's either going to character change, basing, which means that we're still in a base, so there's nothing to do yet, but I want to keep an eye on it. And then volume, which means like ONON when that huge volume trend starter came. Uh, obviously, I know that that's going to start a long-term trend, but there's nothing to do yet because I can't manage risk. So, um, I just add that to a volume list, and then they all go into my universe list here, and I just kind of go through and uh check them all out. DocuSign I wrote on X, I think yesterday, how this is one of my biggest fumbles of the year. But all right, let's jump into. You think we're ready, Craig, to jump into the last part, sell decisions?
Yeah. Yeah. Yeah.
Okay, so one of the biggest questions I get is how do you know when to sell? And uh, I still want to do a presentation. The next one that I do, guys, will be on that completely. because it needs its own time. But I just wanted to kind of break down how I view. Oh, I didn't show Roblox. You're right. Sorry. So let me go. Yeah, no, Roblox is a great example. So again, controlled weakness, right? It's very similar to SQ, right? They're both
Yeah.
building these huge bases, and then they have this controlled weakness. A lot of people say it's a retest, right? It's retesting the breakout. So this is the breakout, this is the retest. Now, if we look at Roblox, same thing. You're building this massive base, and the longer the base, I always forget the exact like,
Longer the
popular
base, the higher in space.
higher in space, yeah, something like that. But like, it's true. The bigger the bases will determine my position sizing. If we have a multi-year base that we're breaking out of, I will position size a lot heavier than if we're in like a second stage base, or it's like a 2 week consolidation that allows me to get in and manage risk, but it's like not a proper pivot point. So if we look at Roblox, it's very similar to SQ, right? Like we have uh this massive base, and again, like you kind of have the higher low coming on the right side of the base, which is good. But the biggest thing here is that we broke out above the pivot, and then we came back, and this level that for years has been resistance for the first time uh is acting as support. So that if we just go to right here, levels that indicate a character change. And so this level being resistance and now indicating its support, that's a character change. That's something you want to take note of. So Roblox 2 weeks ago, along with SQ, was on my focus list, which I did post on X. And that's why, because they both popped out of a multi-year resistance, a super long base. Uh, and they just showed it. This is a like character change. When I talk about it from a setup is kind of like what I show you guys, but character change just loosely means, you're looking for changes in character of a stock. And when you use what was previously multi-year resistance as support, um, that's a major character change. And like look over here, right? Like over here, we obviously this is kind of like a bounce off lows. We don't have a long base, which you really want. But even if you saw this as like, I mean, still here, resistance wasn't really made, so that's kind of besides the point. But even if like, if you bought Roblox last week, this is like such small risk. And the thing is if the market's gonna continue, everything depends on the general market, right? 3 out of 4 stocks follow the general market. But if the market's gonna continue to be strong, we're gonna have like it's not gonna constantly go up, right? We're gonna have periods of weakness, we're gonna have corrections. But if you buy stocks that look like this, that are breaking out of multi-year bases, like first stage bases, you're gonna most likely be able to kind of withstand. So if this hopefully, keeps working and the market is strong as it's been, even if you see weakness, like and this is a really good candidate, this is gonna come down, probably be supported by like the 10 week, which is, at that time might be, well above the buy point. And so um the point is that I guess I want you guys to take away from this is the fact that like I talk about the 10 and 30 week moving average a lot, but you're also looking for different signs of like a change in personality of a stock. And this right here, the fact that like this level has always been rejected and now it's support, that's enough to say that okay, something has changed in this stock. Doesn't matter if this fails and didn't break out like it does, because like I said, just like SQ, you take this same kind of trade 100 times, you cannot lose money. Like over time, like these are the risk reward setups that you are going like math is in your favor. So Now I'm just gonna jump into to end this, guys, like the last 20 minutes here. Sell decisions. This is very popular. So when I'm deciding to sell a stock, it depends on four things. One, my personal portfolio performance, which I restart at every year. So I kind of take like each year as a fresh year, and I use my year-to-date performance as kind of a gauge to how aggressive maybe I want to be on selling something, or if I want to give it the benefit of the doubt. The second thing is the general market. The biggest thing I want to say here for the general market, right? There's tons of things that you'll see, distribution days, you know, of course, indexes breaking below, the 50-day. There's a ton of things like for the general market for breadth and stuff like that. But the one thing that I want to emphasize is I categorize the market into two different scenarios. One, there's either more positions than you have or more setups than you have money to buy. So if you're looking in the market and you like there's so many good looking setups and you like have a hard time deciding which one you should buy, that's the sign that the market is good and the market's healthy. Now on the flip side, if you have you know if the you're not seeing a variety of setups and this you're kind of convincing yourselves that you can find an entry into a subpar setup, or you can like maybe manage risk and get into like this setup, or you see everybody on X talking about the same stock or two, right? There's a lack of setups, then that tells me that okay, the market isn't that good. The market might be weaker than we might think. So that's how I basically look at the market. Uh, Briefly is either when I'm scanning, it's either like there's so many stocks to buy, it's like a kid in a candy store, or I'm like forcing myself to find stocks that I can buy. So there's two completely different scenarios. One, like I wish I had a lot more money to buy a lot more, or two, I'm like convincing myself that this stock is viable and I can get in and everybody's looking at the same stock. Yes, I do use stop losses. I always use stop losses for everything. Um the last two parts of a sell decision is position base stage and position performance. So something like this, if the market starts, if this starts making progress and then the market goes into a correction, I'm gonna give a stock like Roblox or SQ um the benefit of the doubt over something else, which I'll pull up in a second. But something like these are brand new uptrends out of very, very long bases. So when you have a huge base and it's a first stage base, like, which means, that everything's reset, like we're now coming out of a long stage base. Something like this, if the market goes into correction, I will give the benefit of the doubt more and keep my stops wider versus like Peloton, you guys have probably seen me talk about. So Peloton, I bought the first character change like right here. Obviously, this isn't a long base like SQ, but this is the first kind of base. It's a multi-week base uh, in the uptrend. So something even like this, buying in this base, I will give more of a benefit of the doubt in market weakness. Um, Versus like if you really wanted to sneak into Peloton, the last 3 weeks here, 3 weeks tight you could have like, the at this week, you could have snuck in and placed your stops, below this 3 weeks tight here. Or even use like the 10-week moving average. You could there's ways to sneak in, but getting in at like the first multi-week base versus getting in after the breakout in a little consolidation period is completely different because if we do have serious market weakness and this pulls in, this is something that will be uh, you know, broken through much quicker than something like this, which is earlier and more established. And so to just emphasize real quick the personal portfolio performance and how it impacts sell rules. So SMCI was one of my first trades at the beginning of this year, and because of this long controlled multi-week, like multi-month base, I was able to get a real like I was able to accumulate a good position. And then when it broke out, I sold it somewhere like over here, and there was no sell signal, but the sell signal for me was it's January, the year just started, and because of this trade in January, I was up 50% on my portfolio. And so, yeah, it could have went a lot higher. But I sold it here just because I wanted to book the gains. Now I'm starting the year up 50%, and that gives you a lot more peace of mind than being up 1% or being down 2% because now I have a lot of uh personal performance cushion, which is going to affect my decision. So now going into February up 50% versus going into February 0%, I can make decisions a little bit differently. Now, like if I have another stock, uh I can keep stocks. I mean, I could keep stops a little wider versus because I have a lot of cushion that I now have in my personal portfolio. So a sell decision for SMCI, was definitely based on the fact that it's very early in the year. It was a very big performance booster for me, and I wanted to get that cushion in my account so that I can make better decisions throughout the rest of the year. The general market again, like if right now I'm holding these four stocks, not UPSC. I don't know why that's not holding UPSC. But uh right now, like, if the market is showing signs of it almost like is just going up and it's too easy, the past week, which is definitely a warning sign, but also it's not a sell signal on its own. So I will be right now, I still see tons and tons of setups, and so the general market is not so much a concern. Even if we do get a rug pull and we do pull back, uh, then that's when it comes down to position performance and position base stage. So if we do kind of get a big correction coming up, then it comes down to these two, my position performance and position base stage. So if we look at Peloton, I'm up 100% on Peloton, and I bought it at the very first base. So I will give this one a lot more benefit of the doubt than something else. So technically, Peloton's kind of riding the 10-week here, but depending on how it happens, right? It all depends if it's a very aggressive sell-off or what happens. But depending on the scenario, since like the 10 and 30 week are going to catch up to price. And so if these get to catch up to price and get far away from my buy point, I might let Peloton cut through the 10 week and pull back and find support at the 30 week. And that's because of the two sell rules. Like one, I bought it at an early stage base, and two, my personal progress on this. Now, if Peloton I was up 20%, even though it's a first stage base, and then the market starts, really getting a little ugly and falling apart, then yeah, I bought the first stage base, but I don't have a lot of cushion, and so I will be more aggressive in getting rid of it, just because you don't want to give up a profit and turn into nothing. But the more cushion that you have, the more leeway you have to give the benefit of the doubt, and basically, uh let things work. That's kind of like what the market is about for me, is letting things work. And if you buy right, you can sit tight, right? Everybody knows buy right, sit tight, but if you buy right, you can sit tight. And so um position base stage also, let me see if I could find like Roblox SQ, right? These are long multi-year bases that are stage one. And so something out of this, like I'm going to be a lot less aggressive with selling because this is something that should be super early, as long as the trend continues. Craig, do you have any like later stage bases maybe?
Uh, I mean, on is a good example. App, what you did with app is amazing. Nick, a couple of questions about position sizing. And I would, maybe this is for a future um, seminar, but I would say that when you're looking at your positions, like you're just talking about right now with Square and Roblox, is when they're coming out of multi-year bases, really, really, really long bases. That is when you feel like you can position size up, correct?
100%, yeah. Like the bigger the base is and the earlier the base is, the more support and confidence you can have with position sizing. So
Especially with that Roblox, because it pulled back and it found support. That's like a huge,
yeah,
huge
this is
confirmation to you.
yeah, this is something where, this is like a huge base, and uh you're able, also the way that it came back in retested support, like you can manage risk so well. And
Mhm.
so something like this where you have a multi-year base, um and an ability to manage risk is something where I will position size a lot more aggressively than if like ONON. So ONON, I bought it at a like great risk reward over here. But like this, like you can just look at it, right? Like Roblox, this base is very clear, right? Very clear. And then the character change when resistance becomes support. ONON, this isn't as clear. This is, a very whippy. You want to see controlled action. And this is just a very kind of whippy scenario where I was able to just manage risk. But it's not something that, I have a huge controlled base behind me. So obviously in something like ONON, I did not size as aggressively as something else. So
Can
just
you
a
speak to what percentage of your portfolio you would call a position?
Oh yeah. I get that all the time, and I honestly can't, because I don't pay attention to that at all. When I buy a position, I like decide, okay, this is going to be, maybe I'll risk 1% of my portfolio, or maybe I'll risk 2% of my portfolio if I'm getting aggressive. But whatever size of my portfolio that ends up being, I have no idea. So um, and I know that's not what you guys want to hear. But I always ask all the time, just to like, I love to see people's ideas of, is trading more of an art or a science? And it's a very opinionated thing, right? It's both. But the way that I approach it, it's very much an art, and I very much like uh try to steer clear of like very mathematical, like, you know, number type stuff. And the size of my positions like just can vary, and I honestly don't know. I can obviously like go through my trades and get numbers for you guys, but it's not something that I pay
It's not
attention to.
something you think about when you're putting in a buy. You're looking at
Yeah.
what kind of stock is this? What character is it showing? What stage is it in? And how comfortable do I feel with the risk here? That's your mindset, yeah.
Exactly, yeah. And just going back to like SMCI, like I told you guys, I built a very big position on this when it broke out. And, one thing I just want to say before we end this is like SQ and Roblox are stocks that have been beaten down, built a base like when no one's watching, near lows, and are now kind of resuming a new potential uptrend. SMCI and even APP both have this look, which is a little different. And so these were prior leaders, like stocks that went up a massive amount. And then you kind of get this like, trend stopper bar right here. And then we chop around over here. And so if you're watching a stock like SMCI and you're participating in this trend, as soon as, it starts not trending and chopping around and basing, 90% of traders at that point, like they'll take their gains from the trend, they stop looking, at the stock and they move to like whatever else is trending. But for me, the fact that like, where we start chopping around and building a base after, such a big uptrend, this is when I'm watching like a lot because this this is very controlled. You want to see like if you look at this base right here, and now I'm gonna go to APP, they look very similar, right? Like I've put them side by side on X before. Like both of them had huge uptrends and then they consolidated near highs, but not just like built a base, right? This looks nothing like ONON. This is very controlled. If you're on a daily chart, this might not look so like controlled and stuff like that. But when you're looking at a weekly chart, like this base here and in SMCI, yeah, Dave. Someone just said Dave. Like Dave, same exact thing, right? When you have a stock that comes off lows, has a massive trend, and then builds such a controlled base near highs. Like we came here in Dave, both APP, Dave. We came up a couple 100% and then built a base. And this base that we built is near highs. And when you build a base near highs, like especially one that is so controlled like this, that's telling you that, it's being accumulated within this base. Like uh there's a lot of control here. So yeah, the trend might have stopped, but when you have a base like this is identical to APP. This is identical to SMCI. When you have these multi-week bases that are just like, tight and picture perfect, near highs, you really, want to pay attention. Again, like this might not be a multi-year base, but this is a long base. I honestly don't even know, what this looks like on the daily, but not bad. Just like,
One of the questions, Nick, is what do you mean by controlled base? And you've talked about this before, but a tightening of price action, and then something that Nick really notices is support on that 10 and 30 week plus higher lows within the base is something really good to look for.
yeah, so if you guys like, and again, don't take it black and white. I want you to understand what's going on. Like Dave trended the 10 week, right? And then the trend stopped, it broke the 10 week, but you could see like this is the 30 week here, and it kind of like respected the 30 week, but also this base is like controlled. Like look how tight this is. This is
Yeah,
like,
high
you
price
know,
action. Yeah.
like you can put a cup of coffee right here, and it won't spill, right? Versus like if you guys look at like ONON, right? Like where are you gonna put your cup of coffee? It's gonna
Yeah.
spill, right? Like this is wide and this is loose. It's a 10 and 30 week SMA. But to be honest, guys, like SMA, EMA, I literally don't think makes a difference. Like if somebody switched my SMA to EMA, it would not change how I trade. Like that stuff is very trivial. Uh and really doesn't make a difference. Even if someone took my 10 and 30 week SMA and changed it to, 8 week and 40 week, like it's not gonna that stuff doesn't make a difference. And that's why, you know, I emphasize first principles thinking. Like understand why each piece plays a puzzle, and then where you excel as a trader is when you understand the why of each piece. You know, you think for yourself and you come up with new conclusions that I haven't thought about before. And so when you guys think of first principles trading and the foundation of everything that I'm saying, I know that whoever does will come to me in a month or 2 months and say, you'll find much better entries into character changes than I will. And that's what I want to happen, right? But if you just kind of take it as like I'm looking for these three things, but I don't understand why these three things work, then you're only going to get so far. And so first principles thinking is super important. So yeah, I know you guys have probably a lot more questions on selling. Like I said, I will get more into selling. Like I'm gonna do the next presentation I do will be completely on it and profit taking. But yeah, we're coming up on an hour and a half, guys. So I want to end this to respect everybody's time. But yeah, before I think that's the end of this presentation. Before we hop off, Craig, do you see any uh
Yeah, so what I would say, Nick, is, there's a lot of questions about how do you handle gaps? How do you look at fundamentals? How do you handle earnings? And what I would say is all those things are important for some trading styles. But what Nick really has done with this system is he's figured out how he can just focus on price and volume. With his character change screen, his up on volume screen, he's finding stocks that are not on other people's radar, that are coming out of long-term bases, where he can define risk, and then he can basically protect his cost and just sit patiently. All that other stuff, the fundamentals, the earnings, the gaps, it almost melts away when you look at the weekly and you just get to sit. That's why his winners are normally well over 100%. He gets them at low prices. He sits, he waits, he doesn't stare at the screen all day. He doesn't get stressed out. The stocks can whip around, they can change, but he's just sitting and waiting and he gets winners that are huge. And that's
Yeah.
kind of the gift of this system. Not that there aren't other great ways to trade. If you like the fast action and you want to look at 15-minute charts, that's great. But for us, we really like to buy a stock and just let it work. And that's where we find trading is easier, less stressful, and more rewarding. And then you get to like really focus on lifestyle. Um, yeah.
Yeah. And just to add to guys, like so real quick on earnings, like there's no there's no thought on holding a stock through earnings besides do I have enough cushion. So you can look up like an implied move on earnings for any stock and it'll give you like the expected move. So if I'm up 5% and the expected move is 5%, I'm holding. That's all I think about. Like if you're gonna hold stocks over multi months, like multiple cycles, and you want to hold these long moves, you can't like earnings are just part of the equation. Like there's no like they're just part of it. And so the only decision when it comes to am I gonna hold through earnings is like, do I have a little bit of cushion, obviously in case it gaps down. And if I'm up 1% on a stock, I'm not gonna hold through earnings and then risk like 4 or 5% risk of my own capital. I want to have the cushion in that stock. So that's super important. And then gaps, right? Like gaps on weeklies. I sometimes will buy gaps on a weekly that I don't even realize are there because I'm not looking at the daily. And I can tell you from experience, like it doesn't matter. Uh so yeah, this recording, guys, awesome. Everyone says this is better than the first. So cool, guys.
So
Yeah,
Nick,
no,
where can people find out more about you? TraderLion.com, TraderLion channel on YouTube,
yeah, this video will be posted later next week on the TraderLion YouTube.
where you have
And
other videos, and check out the TraderLion conference. You will see incredible traders walk you through their strategy, including Nick.
yeah. And I love the TraderLion conference that we do every year because like I said, trading is a personality thing and it's like that is critical because listen, I being part of TraderLion for the past, 8 years, have worked with so many amazing people, right? And if you guys had to like needed someone to manage your money and it was, me or Meet Rye or Oliver Kell, like, you know, I'll beat the market, but like those guys, will do even crazier. So like I'm not my point here isn't that weekly charts and my approach is the superior way. I'm just saying that it matches my personality. From what I'd gathered working with tons and tons of traders, I think it matches their personality as well. And trading is about longevity and also, you know, uh, it's about longevity and liking, what you do. So there's nothing wrong if you guys watch this, say this guy's an idiot. Like I'm just gonna trade 15-minute charts. Like that's fine. There's nothing wrong with 15-minute charts. I'm not saying there's anything wrong with anything at all, but what I do know is that most people's errors and what's holding them back is from them over trading and doing things when they should not be doing anything at all. And I think that, at least I can offer a perspective of how I combated that for myself, how I overcame it, and why I love, the approach that I came to. And this wasn't overnight. Like I've been trading for 11 years and every single year I get better and it turns into some variation that moves it forward and I always get better. So it's an endless, iteration of finding out what you like better than something else, what works best, and always improving. And that's really what it's all about. But at the end of the day, like you have to think of what your motivations are. Mine, I value time, not money. I like money because it usually gives you time, right? But I value the time over it. So if I can have all of my time to spend with my dogs, my loved ones, like my family, and working on the businesses, like stuff like that. If I can have all my time, that's the best thing in the world for me versus like if you offered me I can double my income, but I have to stare at intraday charts all the time.
Yeah.
I can't do that. So awesome. Thank you guys so much for joining. I really hope that you found value in it and appreciated it. Again, as long as you guys signed up for this, it will be you'll get an email as soon as it's posted. So yeah, and guys, I saw you guys asking for a DPU discount code. DPU Black Friday is over, so I can't offer that. But if you aren't a DPU user and you are interested, um, I could maybe give you like, a little something off. But message me on X. Thank you guys very much for joining. The next webinar I'll announce. It'll probably be in like a week or two. But yeah, thank you guys very much for your time. Craig, thank you so much for joining me here and helping out.
Great job, man.